Hello, I just wanted to make a video on the Federal Open Market Committee meeting, or FOMC meeting, that just occurred a few days ago. I wanted to give a brief little summary and then, just my thoughts on how the meeting went. Just a basic overview of what we saw in this meeting and how we will move forward from it. So to start, I wanted to go over, what is the FOMC? Who is on it? Where are they located in the Fed? What goes on in the FOMC? So it's basically just a committee in the Federal Reserve that is responsible for overseeing the open market operations of the United States. They make decisions on the interest rates and the growth of the money supply in the United States. So on the right-hand side of the screen, I have two little flow charts of examples of what the FOMC can do to either A, expand the money in the United States, or B, contract the amount of money that is flowing within the United States. So on the left-hand side there, you can see the Federal Reserve can buy Treasury securities from primary dealers or banks, basically giving them money, giving the banking system money, more capital, which allows the federal fund rate to decline. So it's making money cheaper so that more people can take out loans and basically stimulate the economy. So, that is what the FOMC at the moment seems as if they're leaning towards. A lot of people were thinking that we could potentially have a rate cut, or the federal funds rate could decline in this meeting. And while it did not, that is still a potential in the future. On the right-hand side is what the Fed has been doing for the past, few years, past decade, and that is where they're selling these Treasury securities, and the banking system, basically their reserves decline and the interest rates increase. And when your interest rates increase, the banks are less likely to give out loans because it's more expensive. If money is cheaper or the rates are lower, that the banks are going to be willing to give out more loans. So again, on the left-hand side would be an expansionary way of stimulating the economy, and then on the right-hand side would be more of constriction of the economy. So moving on, where is this committee? So the FOMC is located within the Fed, which is under Congress, and so you can see there the upper level is the Fed, and then underneath you have these three subsidiaries. So you've got the Board of Governors, and then you have the 12 Federal Reserve banks, and then you have the FOMC. And you might be asking yourself, well, hey, can I be on this committee? It seems, pretty open to me, and we will get into that. But if you look at the 12 Federal Reserve banks, I have a map here on the right-hand side, and you can see where they are all located, and, there could be one right near you. But anywho, those are the three subsidiaries, and then you can see the functions that I have listed below. But let's go ahead and get into the question of who is on the FOMC. So it consists of 12 voting members, 7 of which are members of the Board of Governors. And then you have the president of the Federal Reserve Bank of New York, and they are on this committee mainly because they are the eyes and ears of the Fed right there on Wall Street. They're much closer to all of the action. And then the other 4 remaining seats are filled by presidents of the 11 remaining banks. So those change year to year, and you can actually go online and look and see, what states are going to have, or what cities are going to have a president on this committee in the coming years. So those 7 members of the Board of Governors, where do they come from? They are appointed by the president. So you can see the list of people on the committee right now, and you might be asking yourself, well, that is not 12 members, and you would be right. Currently, there are only 5 members on the Board of Governors. There are 2 open seats. President Trump has appointed 4 of the 5 people on the board at the moment, and Jerome Powell was already on the board prior to Trump getting elected. And so again, we only have 10 people on the committee at the moment, and there are 2 spots on the Board of Governors that are still open. So now, when it comes down to these meetings, these little 2-day meetings that happen, 6 or 7 weeks apart, what goes on? So you have all 12 of the Reserve Bank presidents coming to these meetings with their ideas, what it is that they're seeing, what it is that they're hearing, so that they can all discuss together. It's not just the 4 presidents that are on the committee along with the president of the New York Fed, but it is all 12 of the banks plus the Board of Governors get together and discuss what is the economic status currently. But only the presidents who are on the list, so the 4 that are on the list plus the president of the New York Fed, are able to vote on any sort of policy decisions that may arise. So that is just, that's important just to keep in your brain so you understand, what it is that's going on at these meetings, who they are, where they're coming from. So that's just a brief little, introduction on that. You can read more about it on the Federal Reserve's website, which I can leave a description to, or a link to in the description. So let's go ahead and get on to the meeting. So this is basically Jerome Powell's opening statement, the first couple of paragraphs in his statement, and he really hit on this, and he has been for months and months now. His overarching goal is to sustain the economic expansion of the United States with having a strong job market, having stable prices, all to help benefit the American people. And then he goes on to the very important, everybody's listening to decision on the interest rates, and he talks on having to or maintaining these policy interest rates, but making some significant changes from the previous statement that they had back on May 1st. So right there, you kind of, it grabs your interest and you're thinking, okay, well, what are these significant changes? And, it's basically that they are, I'll get into it, but it's, they're talking about all the cross currents that they're having now that they didn't necessarily have, or that were, what Powell said, they were moderated at the time of the May meeting. So he says, they're going to emphasize that the committee is going to look closer into the implications of all of this incoming information to help better understand and better plan for the economic outlook of the United States. So that was basically his opening, couple paragraphs, and then he really moves into the meat of the statement. And he says that, this was basically a very prominent point in the statement, saying that there is patience that is needed for assessing the further changes in our economy. That was mainly what the meeting was about. Any questions that he got in respect to cutting rates, not cutting rates, he replied with it, we need to have patience at the moment. We don't want to jump one way or another real quick to cut rates when we can get a little bit more data, understand better where the economy, not only ours, but the global economy is headed with more data. So Then he talks about how the economy has performed well up to this point. If you look at a chart of the S&P 500, ever since December's low last year, we have been up quite significantly, except for the month of May. And Powell does note that the month of May was relatively low. And then he starts to go on into the cross currents, which he was talking about, or that I spoke on earlier. He says that these cross currents were moderated at the last meeting back in May, but they've now reemerged. And if you remember that timeline, you basically had the Fed had their meeting at the beginning of May, and then Trump really started to stir the pot with the whole trade wars situation, saying that he was going to impose tariffs on China, and then about a week later he said he was going to impose tariffs on Mexico, and it really started to make the market seem really shaky, and people were selling their shares, and the market was starting to fall pretty rapidly, and that led to these growth indicators being a little bit more disappointing, which raised the concern about the overall global economy, but they did note that they thought that the disappointment was due to these trade concerns, and that hopefully these trade wars were going to be coming to an end sometime in the near future, but really we don't know, because they've been going on for quite some time now, and just when we thought we were going to get a deal, something happens, and we get all shaken up. So moving right along, Powell then goes on and says that the baseline outlook is still remaining favorable. So moving forward throughout the end of this year and into next, we're still looking favorable. But they must pay attention to all of these uncertainties that are coming up. So these trade wars and our growth indicators, which are closely tied together now, what improvements are we seeing to them to show more growth in the future? Those are important points that he's looking at. And when he spoke on growth indicators, he really looked at spending and consumption and business investment. Those were all really important indicators to look at. They were reliable indicators to look at to show growth of the United States economy. So that was important. And then he talks about how many of the committee members are seeing a better case for having more monetary policy. So meaning they are basically more dovish now. They're leaning more to rate cuts, but they're waiting for more data to come in. So that was a very dovish stance that they took. The markets responded not too strongly one way or the other. We ended up closing that day green. But it was nothing super extravagant when they leaned a little bit more dovish, and I think that's because we really need to see them just go ahead. I feel like people just want to see them go ahead and cut rates and just start to stimulate the economy now. We're so used to having these low interest rates that people just want the stimulus back. So I think that's how people saw that, but let's move on here. Consumption, he stated, was weak in the first quarter, but the incoming data, I guess, that they were getting near the time of this meeting showed that we've bounced back from those first quarter lows or first quarter woes. The new data that's coming in is showing that consumer spending is moving at a good clip here, while manufacturing is still declining throughout this year. So as he was wrapping up this meeting, it was only about, or the statement was only about 6 or 7 minutes, but he again stated that the outlook is still favorable. but the committee members had, really looked at the point and cited that investments are looking weaker and business sentiments are looking weaker. And again, those are important points that Powell mentioned, that they look at the reliable indicators of where it is the market is moving. And again, the cross currents, the trade wars, growth indicators, they're starting to see that a more negative outcome might come to light if action is not taken. So that is something that they will be keeping an eye on. And down here, this second bullet point here showing that a lot of the participants thought that cuts were appropriate, and will be appropriate in the scenario that they see most likely. So they see the economy needing some sort of stimulus to continue their overarching goal of expansion, economic expansion, keeping this 10-year run rolling right along throughout the remainder of this year and into next. And if that's possible, we will see. But that is what it was that they saw. And then he closed as really restating what he stated in the beginning, just a little bit more prominent, saying that it was important that the monetary policy does not overreact to any individual data point or short swing in sentiment. They didn't want to see any one data point and react emotionally or quickly to said data point and just go ahead and slash rates by a quarter or a half point, but that they wanted to move slowly on it and make sure that they are making the right decision at the right time when the U.S. economy needs it. So that was his statement. Then he goes into questioning, and again, I would recommend going and listening to the questioning. I wanted to make this video relatively short and just go over his overall statement and what I thought and what I got from it. I'll move into just my summary. So where we sit right now is we're at a crossroads. We're kind of at a tipping point. And it could be at the July meeting that we see the actual rates being cut, or it could be in September. We're really just waiting on this incoming data. So with that being said, when the data comes out, it'll be very important. I think more and more people will be looking at it since Powell spoke so much on this data and how it was going to affect their decision for the July meeting. So when I'm talking about data, let's look at sentiment, consumer spending, job growth, unemployment. All of those are points that they're going to be looking at to come up with their decision. So those are all very important. They're weighing a lot on the overall growth of the economy and if rate cuts will be seen in the future. So with that being said, now we're seeing more members move to the stance that rates should be cut, and they're also seeing more members move to the stance that there's a strengthened case to see cuts in the future. They don't think cuts should occur now, but there is a better case now than there has been in previous meetings. And that's all very important to note. What I got from that is that we are seeing a pretty dovish Fed at the moment, and that we could see rate cuts as early as July or in September. And I think if we were to see things start to get really shaky here and we started to see the market go down in the near term prior to July, the FOMC does have the power to call an impromptu meeting where they could change the monetary policy when they see fit. So just keep that in mind as well. I would recommend that you pay attention to what it is that the FOMC is saying, what news is coming out about the market, how the trade wars are going, just so that you are understanding, what is the U.S. economy doing at this time? Because I think we are at a pretty important stage in this economic cycle where we can either continue to be stimulated higher and higher, or maybe the stimulus doesn't work and the economy starts to deteriorate some. So just pay attention to that. Again, I hope this video helped. It was pretty brief, but I wanted to go through it because I thought it had some important points to look at as we move into the future. So hopefully you learned something from it. I know I learned something from it just going through everything, and hopefully you guys have bettered yourself by watching it. So thank you for watching, and I hope you have a wonderful day.